Even though the Federal Reserve during the most recent meeting leaves interest rates unchanged, he still alluded that cuts are going to be coming in September, which are long-awaited cuts, especially for certain areas in the market that are going to benefit greatly when it comes to interest rates being cut sometime in the future. Now in this video, we're going to go over a real estate investment trust ETF that is going to see some massive upside if and when interest rates get cut very soon here. So especially if you're a dividend investor that likes investing into real estate investment trusts or REITs, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the real estate investment trust ETF that we're talking about for this video is ticker symbol XLRE, or the Real Estate Select Sector SPDR fund. Now, as of this point, I haven't dug too deep into this fund, so let's take a look at it together. It says the Real Estate Select Sector SPDR fund seeks to provide investment results that before expenses correspond generally to the price and yield performance of the Real Estate Select Sector Index, the index. The index seeks to provide an effective representation of the real estate sector of the S&P 500 index. It seeks to provide precise exposure to companies from real estate management and development in REITs, excluding mortgage REITs, allows investors to take strategic or tactical positions at a more targeted level than traditional based investing. It then says about this benchmark, the companies included in each select sector index are selected on the basis of general industry classification from a universe of companies defined by the Standard & Poor's 500 Composite Stock Index. The 11 select sector indexes, each a select sector index, upon which select sector SPDR funds are based together, comprise all the companies in the S&P 500. Now this ETF has been around since October 7th of 2015 and has a gross expense ratio of just 0.09%, which is pretty cheap, especially for this sort of ETF. Now, the next thing you're probably interested in is what are the holdings in this ETF, how many stocks are actually in it, how many REITs make up this ETF, etc. So as of right now, the top holdings in this ETF are things like Prologis, which is around 11%. That's obviously a very popular REIT that's on the top end of most real estate investment trust ETFs across the markets. Then we have American Tower, one of my favorites, almost 10% of this REIT. Then we have Equinix, we have Welltower, we have Simon Property, more of the same, Realty Income. We have some Digital Realty Trust, some Crown Castle, some Public Storage, and CBRE Group Inc. Class A. Now, also interesting, you can actually see the fund industry allocation. So for me personally, I really enjoy investing into retail REITs. I feel as if retail REITs are sort of the most recession-proof REITs, because real estate investment trusts that lease out to different grocery stores, department stores, etc., I think they're going to be essential and they're going to be busy and paying rent no matter what happens in the market moving forward. But as far as the XLRE ETF, it's mostly specialized REITs at around 44%. Then a majority of this ETF is also things like retail REITs, residential REITs, healthcare REITs, which I'm not necessarily as big of a fan of. Then industrial REITs, which I like, and real estate management and development is around 6.23%. Now, looking a little bit deeper into XLRE's performance over multiple different time frames, and like I said towards the intro, I personally think that real estate investment trusts and of course ETFs that own real estate investment trusts like XLRE are going to see a significant upside move, especially when the Federal Reserve does announce that there's going to be even small, maybe large interest rate cuts sometime in the future. And this is because real estate investment trusts are able to grow a lot faster for a lot cheaper and are just generally worth more money when interest rates are lower. But going off of some historical performance, just as far as price return goes, on the last year, XLRE is actually up around 9%, which is honestly a pretty nice move. Year to date, it's up around 4%. And as of right now, XLRE is trading above $10 above the most recent low. And this is over the last 52-week range. So as of right now, it's not necessarily offering the best buying opportunity, but zooming out historically, is there a good chance that XLRE could hit a new high like we saw in 2022 of around $50 more or less per share? I think it's very possible. So just going off of that, there could potentially be an easy 10% upside in the next year or two, in my opinion. But zooming all the way out, since about October of 2015, this ETF is up around 38%, which isn't horrible, honestly isn't great. There's definitely been better ETFs out there over the same time frame, but let's keep looking into it. Now, of course, when it comes to real estate investment trusts or real estate investment trust ETFs like XLRE, it's not only going to be price performance, you have to look at the dividend also, because real estate investment trusts do pay a significant portion in dividend income, at least most of them do. Now, as far as the trailing 12-month dividend yield for XLRE, we're looking at around 3.31%, so not the highest trailing 12-month dividend yield for a real estate investment trust, but keep in mind, there's a lot of names within the top holdings of XLRE that not only are cash flowing machines, but also some of these names have the potential to move up in share price significantly. And I'm talking significantly, looking at something like AMT or American Tower Corporation, which makes up a large portion of XLRE. This single stock was trading at around $300+ just a few years back, now trading at around $228. So even if a few of the top names in XLRE see some massive upside potential, this REIT is going to be moving up very quickly. But still, going back looking into the dividend yield, this ETF is not necessarily going to offer a massive amount of cash flow to investors, although 3.5% isn't horrible. As far as dividend growth though, another very important metric for long-term dividend investors, there hasn't really been that much dividend growth when it comes to this REIT ETF. Now, a lot of different real estate investment trust ETFs across the market, I sort of noticed the same exact thing. They don't really have significant dividend growth historically. They more or less pay a 3 to maybe 4.5% yield and then sort of pay that ongoingly over the years. Now, this could or could not be something that necessarily makes you invest or maybe not invest into it. I personally own a large portion of VNQ, so although I do invest into REIT ETFs, I still think there's probably better options across the market, which is why for me personally, I'll probably sell off at least some of my VNQ if it hits a certain price point and move that money into something else. Now, this is simply because I, as a younger investor, relatively young at least at 31 years old, I want to invest into things that are going to pay me more and more over time. Even if there's not a massive amount of dividend growth, I want to invest into things that either offer a nice juicy starting yield, or if not, I want to invest in something that's going to pay me more and more over time. But something like XLRE doesn't really do either. It pays sort of a wimpy starting yield and also doesn't really have any dividend growth, only around 2% over the last 5 years. So this is something to consider, but again, I do think that there is some potential upside when it comes to REIT ETFs like this because of the holding breakdown. But at the end of the day, you have to ask yourself, what is it really worth to invest into something and see if it fits what you're looking for. But enough of what I think about XLRE, let's actually let the numbers do the talking for themselves. If an investor back in 2015 invested $10,000 into XLRE and reinvested those dividends the entire way up until around 8.82 years later, that 10K would have turned into around $18,400 or so, or around an 84% total return, which annually is around 7.21%, or around 6.37% annually if you didn't invest the dividends along the way. Now 7%, 6%, it's not horrible, although over the same exact time frame, there definitely were better investments out there. And I think the big problem with some of these REIT ETFs is that the holding breakdown is just a little bit all over the place. And that's why moving forward, I don't personally really invest into these different REIT ETFs. I rather just invest into some of my favorite REITs across the market, which is what I've been doing. Now, all this to say that XLRE over specific timeframes has offered investors a long-term nice return. I mean, around 7% historically every single year isn't horrible by any means. But like I said, over the same exact time frame, it's been pretty hard to invest in anything and not make a 7% or more return. Just saying, the S&P 500 has done much better, of course. But for investors out there that want some exposure into real estate investment trusts, but don't necessarily know what they want to buy into, either A, look into all the different top companies in some of the highest quality real estate investment trust ETFs across the market, because you're probably going to get an idea of which ones really match exactly what you're looking for, whether it is a higher yield or whether it is more upside potential. Or on the other hand, you of course could invest into real estate investment trust ETFs like XLRE because you are getting a little bit of exposure into a lot of different names, so you kind of take the guesswork out of it. Now lastly, would I ever personally invest into XLRE moving forward? Like I said a little bit ago, I personally am not investing into any more real estate investment trust REITs, and that's not because I don't believe in real estate investment trusts by any means. I own a ton of real estate investment trusts across my portfolio as of right now, and like I said, I even own real estate investment trust ETFs. But for me, having exposure to 31 different real estate investment trusts, which of course some of them, like I said, I'm a huge fan of, but some of these real estate investment trusts I don't really want any exposure into, and because the weighting is pretty heavy, meaning that there's a lot of weight in just a few different names. For the most part, when it comes to these real estate investment trust ETFs, I personally would rather do my own research, look throughout the market, and figure out exactly which real estate investment trusts match exactly what I'm looking for, and then invest into those specifically. But now lastly, most importantly, I want to hear from you guys down below. When it comes to real estate investment trusts, REITs across the entire market, which single REIT do you think is going to have the most upside when it comes time for the Federal Reserve to cut interest rates very soon here? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.